Welcome back, everyone. Today, we're going deep on GameStop
Oh, yeah.
as a potential value investment opportunity.
Interesting.
We've got an in-depth analysis here based on, Warren Buffett's principles.
Okay.
We're going to be looking at GameStop's business, the management, financials, risks, and market perception. It's been a wild ride for GameStop.
It really has.
So let's unpack it.
Yeah, what's so fascinating about GameStop is that, a lot of people think of it as just this neighborhood game store.
Right.
But it's a Fortune 500 company.
Yeah, I was surprised by that.
Yeah, it's huge. But they're really struggling to adapt to the digital age.
Yeah, and you can see why, right?
For sure.
Online gaming and mobile gaming are just becoming so dominant, even cloud gaming.
Yeah, and it's really putting pressure on their entire business model.
Yeah, I haven't bought a physical game in, gosh, I don't even know how long.
Right.
Everyone's going digital.
Like, think about it. Steam, Xbox Game Pass, all these platforms and subscription services, right? They're all taking away from GameStop's core business model.
And then you got Amazon and Walmart out there.
Huge competitors.
Yeah.
It's a tough landscape for them.
It is, but the analysis does point out that they do have some advantages going for them.
Yeah.
Like all their physical stores,
Yeah.
still a lot of loyal customers, their omni-channel strategies that they're trying to build.
Right.
Do you think that'll be enough to, save them?
Well, I mean, those stores offer, a real tangible experience that online retailers can't match, right? And brand loyalty,
It's huge.
that's powerful. For a lot of people, GameStop, that's gaming.
Right.
But is that going to be enough to overcome this digital wave? Think about it. GameStop has tried to go digital several times.
Oh, really?
And it hasn't worked out every time. Their execution has been a real problem.
That is a little worrisome.
It's a pattern.
Yeah.
So let's talk about the management team.
Okay, yeah, the people at the helm, what can you tell us about them?
Well, the current leadership team at GameStop, they're pretty new.
Okay.
The average tenure is only a year and a half.
Wow.
The CEO, Ryan Cohen, though, he's got a ton of e-commerce experience, from Chewy.
Right.
But it does mean there's not a long track record to, judge them on.
So a bit of a wild card then.
Yeah.
What have been some of their, big moves so far?
Well, they got rid of dividends, they've pulled back on share buybacks, and they're investing, a lot in e-commerce and blockchain.
Blockchain. Are they trying to ride the crypto wave too?
Exactly. And this is where opinions start to differ.
Oh, yeah?
Some people are saying this is great, being financially careful, exploring these new growth areas.
Okay.
Others are saying, hey, where's the return on these investments, especially in the blockchain?
Yeah, that's fair.
And then they did this at-the-market equity offering, raised $400 million, but it diluted shareholder ownership.
So, they baked a bigger cake, but everyone's slice is smaller now.
Exactly. So the real question is this management team, even with this really limited track record, are they making the right moves for the long term?
That's a tough one. I guess we'll have to see. But let's look at their financials.
Okay.
Then the numbers back up these bold moves.
Well, unfortunately, when we look at the recent financials, it doesn't look great.
Oh.
Declining profitability, negative cash flow from operations, and their gross profit margin, it's shrinking.
Oh, wow. This doesn't sound good.
And these aren't just numbers, right? This is a direct result of all those challenges we talked about.
All right. Like the digital shift, the competition.
Exactly.
Well, is GameStop done for?
Well, no, not necessarily. They actually have a pretty strong balance sheet, surprisingly.
Really?
Yeah, their debt-to-equity ratio is low, and they've got a lot of cash on hand.
Okay.
But there's a catch.
Oh, boy, there's always a catch.
Their book value per share, basically their net worth divided by the number of shares.
Okay.
It's way lower than the current market price.
For those of us who don't speak finance, what does that mean?
It basically means that GameStop might be overvalued.
Overvalued.
The market's betting on a turnaround, but their actual performance doesn't really back that up.
That is concerning. And it feels like we've only just started to uncover this whole story.
Yeah, there's a lot more to it.
But before we get into things like market sentiment and the risks involved, we're going to take a quick break. We'll be right back to finish unpacking GameStop. And remember, the big question is this a worthwhile value investment? Stay tuned.
All right, so let's jump into how the market's viewing GameStop right now.
Okay.
Because it's been, a roller coaster to say the least.
Definitely.
Think back to the short squeeze in 2021. Remember that?
Oh, yeah. It was everywhere.
That and their recent strategic shifts, it's made their valuation, super volatile.
Yeah, their market cap is sitting at $12.05 billion right now, but their price-to-earnings ratio is a whopping 151.01,
Wow.
which is way above average.
It's huge.
Yeah.
And that's the thing. The market is basically like pricing in this huge future growth for GameStop.
Right.
But like we've been talking about, their performance doesn't really support that level of optimism.
It does seem like a big gamble.
Kinda, yeah. Like a high-stakes poker game where everyone's betting on a hand they haven't even seen yet.
Yeah, okay, that makes sense.
The report also mentions some technical analysis pointing to a falling wedge pattern.
Oh, falling wedge pattern.
Yeah, but for those of us who aren't like chart experts, can you break that down?
Yeah, what does that even mean?
Sure. So a falling wedge pattern, it usually suggests that a breakout is coming,
Okay,
either up or down.
so it could go either way.
Yeah, exactly.
Uh,
It's formed by these converging trend lines, and it usually means there's a period of like
Mhm.
consolidation before a big move.
Okay.
And for GameStop, the key resistance levels are at $29, $32, and $42,
Got it.
while support is sitting at $25.
Okay, so those are the numbers to watch then,
Exactly, yeah.
if you're trying to figure out where the stock's going to go.
But there's another layer to this.
Okay, what's that?
The ownership structure of GameStop.
Right, they have a lot of retail investors,
A
right?
huge amount. Yeah, it's not like other companies where it's mostly big institutions.
Okay.
It's a lot of individual investors, and
Yeah.
they're a passionate community.
Yeah,
They can really drive the price up based on hype and momentum.
I've definitely seen that.
But it also means the stock is like really susceptible to those emotional swings and the volatility we've been talking about.
So it's a double-edged sword then.
Pretty much, yeah.
Dedicated fan base, but also unpredictable.
Exactly, and it's a really fascinating dynamic.
It is.
It adds another layer of complexity to the whole GameStop story.
Okay, so to recap, we've got this company with a core business that's struggling, new management making big changes, financials that are a bit shaky, but a strong balance sheet, and a valuation that seems to be driven by speculation and these passionate retail investors. It feels like we're walking through a minefield here.
It kind of is.
So what does all this mean when we're trying to figure out the risks involved with GameStop?
That's the key question. Every investment has risks, right? But with GameStop, they're prominent, I guess.
Okay.
And understanding those risks is crucial for anyone who's thinking about investing.
Right.
It's like a SWOT analysis: strengths, weaknesses, opportunities, and threats.
I like that.
Let's break it down.
Yeah, okay, let's start with strengths.
All right, so their strong balance sheet, that's a huge plus.
Okay,
It gives them some flexibility,
to make changes and stuff.
Exactly.
Right.
And they've also shown that they're willing to adapt even if they haven't always been successful at it.
Right.
Plus, their brand recognition and loyal customer base, you can't ignore that.
Yeah, for sure.
There's a lot of nostalgia for GameStop, a lot of gamers who love the company.
Makes sense. Okay, so those are some of the good things, but what about the weaknesses? What could make things worse?
Well, their biggest weakness is that they're relying on a business model that's, fading.
Right, the digital shift.
Yeah, it's like a tide that they're struggling to swim against.
Yeah.
Their negative cash flow is also a big concern.
Okay.
It makes you wonder if they can even survive long-term if they don't turn that around.
Right.
And their valuation, like we talked about, it's so disconnected from their actual performance
Yeah.
that any bad news could send the stock plummeting.
Okay, so basically, too reliant on a struggling business model, negative cash flow, and a sky-high valuation, those are all red flags.
Exactly.
God.
These weaknesses, they really amplify the risks of investing in GameStop.
All right, so we've covered the good and the bad. What about opportunities? Are there any bright spots that could help them out?
There are a few. Yeah, the gaming market's always changing.
Right.
And there might be some new trends that actually benefit GameStop.
Okay, interesting.
They could also use their current infrastructure and customer base to branch out into new markets or products, maybe become a hub for gaming communities or esports.
So diversification is key.
It could be, yeah, it's worth looking into.
Right.
And then there's always the chance of a strategic acquisition or partnership, something that could revitalize the company.
That makes sense. Okay. But before we get too excited about the potential upside, let's talk threats.
Sure.
What are some things that could make GameStop's situation even riskier?
Well, a lot of the threats are unfortunately out of their control.
Like what?
The continued rise of Digital platforms like Steam, cloud gaming becoming more popular, those are big challenges to their core business.
Yeah, those aren't going away.
Exactly.
Yeah.
And competition from Amazon and Walmart, that's not going to let up anytime soon.
Right.
And then there's always the potential for another economic downturn, which would likely cause people to spend less on, non-essentials like video games.
It's like they're fighting a war on multiple fronts.
Kinda, yeah.
So after looking at all this, the strengths, weaknesses, opportunities, threats, where do we land on the risk assessment for GameStop?
Honestly, GameStop is a high-risk investment.
Okay.
The potential rewards are definitely there, but they're overshadowed by the considerable downside risk.
So would you ever consider GameStop a good investment?
That's the million-dollar question.
It is.
And the answer might surprise you.
Oh.
But first, we want to remind everyone that everything we're talking about today is based on research and AI analysis.
Yes. And as always, this isn't financial advice, just two people who are, really interested in GameStop exploring all the details.
Right.
And if you're as fascinated by the stock market as we are, we really recommend checking out the Stock Analytics AI YouTube channel.
For sure, there's tons of great content there.
Okay, so the big question, is GameStop a worthwhile investment?
Well, I think our listeners have earned the answer.
I have, so what is it?
Well, based on everything, all the research, all the data we've gone over, the evidence just doesn't support GameStop as a good value investment.
So it's a no. A thumbs down after all this.
I mean, remember, value investing is all about finding companies with strong fundamentals, a proven track record,
Right.
and a price that makes sense, reflect their actual value.
Right.
GameStop, at least right now, it just doesn't pick those boxes.
Okay.
Their business model is facing these huge challenges. Financials are iffy, and the valuation seems to be, mostly driven by speculation.
Yeah, I could see how that would make it a risky bet.
It is. It's more of a gamble than an actual value investment at this point.
Yeah, that's fair. It's going to be a tough pill to swallow for anyone who's hoping for a different outcome.
I understand that, but the market changes constantly.
True. Things could turn around.
Exactly. What's true today might not be true tomorrow. That's what makes investing so, exciting and challenging at the same time.
Definitely. So what would have to change for you to, reconsider GameStop?
Well, I'd need to see some real proof that they've turned their core business around.
Okay.
They'd have to show consistent profitability, positive cash flow,
Right.
and a solid plan for, dealing with the whole digital gaming world. It's not enough to just talk about change. They've got to actually do it.
Right. They got to prove they can adapt and actually thrive in this new gaming landscape.
Exactly. And their valuation would have to line up more with, their actual financial performance.
Because right now it's all speculation.
Yeah, and that just leads to volatility, which makes it a risky gamble.
Gotcha. So it's not about giving up on GameStop entirely. It's more about waiting for them to, walk the walk.
Exactly. It's a wait-and-see situation.
All right. Well, this has been an amazing deep dive into GameStop. I feel like I've learned so much.
Me too.
We've seen the challenges, the big moves they're making, the risks involved.
It's a great example of how even a company everyone knows can be a really complex investment.
Absolutely. It really shows how important it is to do your research, understand your own investment goals, and be aware of the risks before you put any money down.
Couldn't have said it better myself.
A huge thanks to all our listeners for joining us on this deep dive.
Yes. Thank you, everyone.
We hope you found it valuable.
And thought-provoking.
And if you're interested in more analysis like this, be sure to subscribe to the Stock Analytics AI YouTube channel.
Yeah, we've got tons of deep dives into all sorts of companies and industries.
So we love having you all along for the ride. And don't forget to leave your stock suggestions in the comments.
We're always looking for new companies to explore.
Until next time, happy investing, everyone.